Hi guys, good morning, good afternoon, wherever you are in the world. I'm really pleased to be able to do our next LinkedIn, Facebook and YouTube live. It would be great to hear from all of you where you are listening in from. And if you can tell us a little bit about who you are as well, whether you're a Shopify merchant, whether you're an agency, or whether you're a business that wants to tune in to look at essentially how to manage your finances better. So just by way of introductions, my name is Adam Pierce. I'm the CEO at Blend Commerce. We are a Shopify agency based in Warwickshire that helps growing Shopify stores get the best from their Shopify growth. And I'm really pleased to be able to welcome someone who is I'm actually a client of theirs, and that's Karl. So Karl basically joins today as someone who I would say is probably the most forward-thinking accountant that I've ever worked with. And I think, to be honest with you guys, when it comes to accountancy, we sometimes, I think, probably don't imagine how an accountant can help us. And I think, one of the things that Karl's definitely done for us, our business, is to think more clearly about not just actually the reporting side of accountancy, but actually the management side of it. So Karl, is that a good enough plug to start off with?
I like it, Adam. I like it. The most forward-thinking accountant. I like that. Thank you very much. Happy to be here. Thanks for having me. Yeah, thank you. Do you want me to give a bit of a spiel about myself, Adam?
Yeah, tell us a little bit about yourself, and I know we'll learn a bit more later on too.
Sure. So yeah, Karl Roberts. I'm one of the directors at GMR Accountants. We're a small firm, accountancy firm in the UK that really enjoys working with businesses like Adam's, people that are forward thinking, like myself. They want to grow their business and they're keen to work with someone really in partnership to help kind of improve their business, but they may not have their strong side, let's say, might not be the numbers. So that's where I come in, and we create that good partnership and work together to grow that business. And that's what we enjoy doing. We do all the run-of-the-mill stuff, your account, your payroll, your VAT, your bookkeeping, all that exciting stuff. But what really gets really floats my boat is working with people like Adam and really getting involved with those businesses and helping them with their numbers.
Fantastic. And I think, Tosh, guys, just to kind of set the context for today's session, me as a business owner, I think, Tosh, look, I'm someone that I think likes the idea of finance and likes the idea of kind of managing it better and getting the most from it, but is not, I guess, someone that finds it easy to kind of actually find the stories and the numbers that we're looking for. And I think also, the main thing for me is that in terms of actually what's been able to kind of know about what we should be doing in terms of managing our finances better. And I think when it comes to kind of our clients, particularly kind of Shopify store owners, if you are a Shopify merchant who's listening, I know that kind of when you start a business, the finance side of things is probably something that you think less about. But obviously, as time goes on, you start realizing that actually it is important to plan, and it is important to have basically a bit of a plan and a roadmap about what you want to do with the business financially, and kind of having those tools and having that plan of what to do becomes a lot more important. I think, that's probably the stage when I personally met Karl, me and my business partner, Peter, that we were at. We've been literally looking at accountancy and looking at our numbers as something that we just do that once a quarter. And it's kind of made us, when we spoke with Karl, thinking about it, something we can think on a more consistent basis. And I think for you guys that are running Shopify stores, there's definitely, a need to essentially get your shit together is probably the best way to talk about it. So on that note, Karl, in terms of kind of getting your shit together, what's kind of the plan? What do we need to do to be able to start to get on this path to thinking about finances and managing finances better?
Yeah, cool. So you've kind of led me in there nicely, Adam, because the first thing is the plan. What does the plan look like in terms of numbers? Quite often I'll speak to business owners and ask them about their business and their goals. And generally it starts with, we want to grow. But what does that look like? What does growth really look like? And it's important here to really put some numbers behind it, because for any business that grows, there's going to be some growing pains along the way in terms of the money will go up and it will go down. So you need to be ahead of the game and start to think about, what will that look like in a month's time, 6 months time, a year's time, 3 years time. So, but it starts with you. It starts with you as the business owner. I work with small business owners, really, small businesses, I should say, that have lifestyle businesses. So generally, the business is just a vehicle to give you, as the business owner, the life that you want. So you need to start there. You need to start there, Adam. What is the life that you want? And what do those what does a financial picture look like for you personally? If you want that new 5-bedroom house, what does that look like? When will you get it? How much extra money will that cost you? You need to start to evaluate what are your current expenditure. How much money do you want to invest? You really got to start with your personal shit, as you say, Adam. You've got to get that together. You've got to understand, where are you now in terms of your expenditure? What do you need to cover? What's the necessities? And then what do you want to build upon on top of that? What do you want in savings, investments, luxuries, cars, houses, those kind of things? Start there. Okay. Then you can work your way back up to your business. So most people will go, I want to grow my business. And the first thing they'll do is, I want to hit 1 million this year in sales. That's the first thing they'll do. And essentially they're hoping to hit 1 million and hoping that there will be enough left in the pot to give them the life that they want. But I prefer to completely reverse it and say, right, what do you need personally? Let's look at what the business has to do to deliver that to you. Okay. Generally, I would do this on an annual basis, and we can chunk it down later on. But I think it's really important to get an understanding of what's that going to look like. And we work all the way back up to, okay, to give me the life I want, my sales need to be X. And I think, Adam, you've got a slide there somewhere that we can share just to kind of put some numbers behind this. So you'll notice right at the bottom of this kind of slide is our sales. That's what we want our sales to be. And we've got there by starting with the personal finances. What are those personal expenses? The mortgage, your utilities, eating out bills, everything. What does that look like? So you've kind of got to do a bit of an audit on your personal circumstances to see, where'd you spend your money? You've got to start there. Then you might say, well, I'd like to be saving £25,000 this year. I'd like to have that buffer sat in my bank account. Great. But I'd also like to invest £15,000. Okay, brilliant. So we now know that really you need to bring in £90,000 to achieve all of those personal goals. Now, at this point, we've got to mention somebody that nobody particularly likes, and that's the tax man, because he's going to want to take a cut of your money. Okay, there's no way around it. There are certainly ways to reduce tax legally, but tax is a fact of life. If you're going to earn money, you're going to pay some tax along the way. So let's not ignore it. Let's factor it in. So on my little example here, I've got 90,000. That's the amount of money after tax you need in your personal bank account. Now, I know there's people from all over the world potentially watching this, so your tax rates will be different in each company. But in the UK, when you draw money out of your limited company, there is tax consequences. So I factored in an estimate to say that you'll need to draw out £112,500 from your limited company, pay the tax bill on that, and then you're left with the 90,000 left. So that's what we know we need to draw from our limited company, but also you might want to buffer in your company as well. So I've put in £20,000 there. So on an annual basis, we'd like to save an extra £20,000. So we now know what our profit after tax in our company needs to be to give us those two numbers. And again, the taxman likes to take a chunk of your company profits. So let's factor that in at this stage. And that gets us to the 165. So your company has to earn profit before tax of £165,000. So what do we know? Well, we'll know what our overheads are, what our general running costs of the business are. You might have some salaries, you might rent an office, some marketing spend. You should know what your fixed costs are, i.e. those costs that don't really change with the level of sales that you do. So in this example, I've got 150,000 there. Now, we now know that we've got to make £315,000 gross profit, direct profit from our sales, because that covers our 150,000 and leaves us with the 165. So the next question we ask ourselves is, well, that's the gross profit. What's the percentage the gross profit percentage, how much am I keeping from each sale once I've taken into account all my direct costs? So that's you buying the goods, that's the fees that you incur on the transactions, postage, packaging, all those kind of direct costs. Let's say it's 25% that you're left with off each sale. That now gives us our sales figure. That's the 1.2 million that you see there. So I've gone all the way from saying, what are my personal expenses, up to this is the sales figure that I need to hit on an annual basis to give me that result. And then you'll be able to track it back and play with the numbers to just say, if those numbers were less, if they were more, you can just use that kind of formula there and it will give you that sales figure, rather than going for the sales first, ignoring the potential profit that's on those sales and hoping there's enough left in the pot for you at the end of the day. Does that make sense, Adam? I went on quite a bit there. I've got a dry mouth.
No, definitely. I mean, I think the thing is, this is what you've done a lot, with Peter and I, isn't it? About saying, look, when you start a business, you're not thinking about how much tax you're going to generate. And you're not thinking about profits actually in terms of the specifics. What you're thinking about is what you want to get out of that business, because, like you, like myself, we started business because we wanted to better ourselves and have a better lifestyle that we wanted. And obviously, cash, of course, at the end of the day, is going to be a big part of that. Yes. And I think, looking at it from this angle, it just makes a lot more sense to me, because a lot of the, Shopify merchants who are watching us, I know you guys are the same. You guys started a business to basically give you that freedom and give you the things that you wanted out of life and be able to do and experience those things. And I think this is a really smart way of being able to do that. So yeah, I completely subscribe to this. Would love to hear what people in the audience think too. I think we've got some questions in a second as well, Karl. But yeah, that's great. Thank you.
Welcome. I think what this section kind of highlights is that our business drives our personal life, but it's also very easy for the two to get muddled together. So as you see your sales rising on a monthly basis, the natural feeling is we're doing better. We're doing really well. So you might go and put a deposit down on that new car that you've been looking at, or the new house, or you might up your personal expenditure just because the sales are going up, but it doesn't always fit like that. So it's really important to be aware of those numbers. The important numbers is the bottom line figures, particularly from the business point of view. What's the leftovers, not necessarily what is the sales value, because sales does not equal cash. Very rarely does extra sales equal extra cash. You'll know yourself, Adam, from growing your business, you get to that point. You get to that point where you can't do any more. You as the business owners, you've only got so many hours in the day, and you need to invest at that next level to get you up there. There's always that point of investment. So it's about planning, isn't it? It's about looking forward and saying, okay, well, we can get this far, but when we get to this point in our business, we're going to need some extra help. And that's where you generally need some extra cash. If you've not planned for that, then you're using money that maybe the business couldn't afford to use to get you up that next level. It's always good to be ahead of the game.
Absolutely. Okay, Karl. Well, I'm going to just I'm going to take away the slides for a moment. I just wanted to put a question up. So Chrissy's asked a couple of questions. Actually, she was previously was going to ask about dividends and capital tax, and she then said some people also say to take out profit first. So I think Chrissy might be talking about the way that I think use salary and dividends, I imagine, to essentially pay ourselves, kind of ways around doing that.
So we're talking about this structure in the way that you take your money out, or we're talking, so some people say to take profit out first. I don't know whether Chrissy's leading towards the book Profit First, and that's the message of his book, Take Your Profit First.
Yeah, so she previously said this.
So ask about dividends, capital tax thing. Okay. I think so. Dividends, and this is going to be UK specific. Bear in mind here, Adam. So there is a way that us as accountants would advise you to structure your income from your limited company, and that would generally be a small salary that ensures that you qualify for national insurance rights and means you get your year's stamp, so you get the pension that you're entitled to when you need it. And the rest of the money would come out as dividends. And dividends is basically a return on your investment. So you would generally be a director of the company and a shareholder, the owner. And by owning shares in that company, you're entitled to dividends. And dividends are paid to you after tax. So it's quite an important point, this, because it goes back to the fact that cash doesn't equal profit. So it might be that sales are going up, there's more money in the bank at that point in time, and you think, well, I'll take that as dividends. However, you may not have factored in any taxes that are due on that payment. And then you're the wrong way around. You actually end up owing your company money because you've taken money that was never actually rightfully yours, because you can't pay dividends out of profit that is not there. You've got to factor in that nasty tax man along the way. I'm not sure if I've answered Chrissy's question there, but happy for her to ping me a message if she wants more clarification on that.
Yeah, I think she was also asking about the book as well, about the Profit First book. But
yeah.
I think let's talk about profit first. I think probably a little bit later on as well. I know when you spoke to us, you've talked about this kind of concept of chunking it down. So I don't know if you want to kind of speak a little bit more about that.
Sure. So what we looked at before was an annual picture. So we ended up with our 1.2 million target of sales. We'll chunk that down. Let's create a budget that's spread over the 12 months. Because what can often happen is everybody sits there in that quiet week between Christmas and New Year and creates their plan for the year. Okay. And it's generally an annual plan. And for many of those people, they've forgotten it by about now, 15th of February. They've forgotten that. So you take that plan, and if you want to hit those sales targets at those margins to achieve this profit, chunk it down into monthly milestones, even weekly, even daily milestones, because that then focuses the whole team then. So 1.2 million, what does that look like on a monthly basis? So you need to know, what is your average sales value? And basically, how many do you need to sell? How many do you need to sell at what average margin to achieve that total net profit value? So constantly chunk it down. And as I said, Adam, you can get down to daily. So that means that we need to be achieving 15 sales a day to achieve that 1.2 million target at the end of the year. It's so much easier to focus on small bite-sized chunks rather than that big number. That big number will happen if you hit your small milestones. And as I say, it's a great way of getting your team involved. A simple whiteboard in the office or wherever it may be that just says we need to hit this many sales on a daily basis. Everybody's focused on the same goal then, but always being mindful of the profit element. Sales is great, but you need to ensure that the profit is there as well.
Mm-hmm. Excellent. Okay, cool. So I guess what we're saying is that, look, you need to understand your numbers, and in reality, look, I think we all get obsessed with revenue, we all get obsessed with sales, but in reality, what you're saying is that, look, it doesn't really actually mean anything, and actually, it's that kind of, I know you kind of talk about leftovers counting.
Yeah.
So what do you mean by that?
It's the leftover that counts, and the leftover is the profit. The leftover is the profit and the cash that's left, not necessarily the sales value. In fact, Adam, there is another slide. I should have mentioned this before that might just show this quite easily. It's called simple. Yeah, so it starts there, and a few slides on, as a simple example, the leftovers is the profit, and this is why it's so important to understand your gross profit. How much is left over from your sales? That is the important figure. That should be the first kind of figure that you're looking at when you start looking at your financials, because it's the gross profit that pays off those overheads and gives you the leftover profit, not necessarily the sales. If you click to the next slide, Adam, It might be on the next slide. That's very simple, very simple example. Okay, so this example shows we've got a business that turns over £800,000 that has a 20% gross profit margin. Well, that earns the business 160,000 before it covers its overheads. Compare that to a business that's got a stronger gross profit margin of 40%. Well, it only needs 500,000 to achieve a 200,000 pound gross profit margin. So it's 40,000 pound better off with 300,000 pound less sales. So it's that number I always talk about. It is the most important number in your business, that gross profit number, and you have to know it. You have to know it. Now, I think the audience that we're going to have here, Adam, with people on Shopify, there could be a range of products there. And my example is very simplistic. If there's a number of products that they're selling, they need to know the gross profit margin for each and every product. And for other businesses, it's service lines. You need to know what are the leftovers, because then you can start to model things. If you've got a great selling product that's got a 12% margin, whereas a really kind of low selling product that might have a, say, 50% margin. Well, you know, if you can swing that and sell more of the 50% margin, then your results will look dramatically different compared to, you know, selling the lower margin. And the lower margin feels good because you look on your Shopify account or wherever it may be, and the numbers are stacking up. You see those sales numbers getting up higher and higher and higher and higher. But the danger with that is you're not making actually much money from it. And as those sales go higher, you hit that investment point in your business. You need additional structure in there. You need to invest in additional costs. And because the margin's so small, then that cost can outweigh the margin. And that's where you can end up in a loss-making position, even though the sales are increasing time over time. So, yeah, you're probably sick of me already, Adam, in our meetings where I will always talk about the gross profit margin, but it's crucial. It's so important.
Definitely. But I think the problem is in the Shopify world, Karl, is that, you know, if you look around on social media, and I'm sure a lot of people can kind of attest to this too, is that there are a lot of people sharing, you know, screenshots of what their sales have been over the past month or past week. And it's always that thing of looking at it and saying, well, okay, that's great, but what were your costs to get those sales? And it's actually really interesting kind of when you drill down to it and you look at clients, and sometimes look, they're so obsessed with the fact they've got this best-selling product, but their margin on that product's 8%, but actually they've got something that's doing pretty good in the middle, which is more like 20-25%. And you just think, well, you know, look, you've got to start focusing your efforts on those products with the margin, not. And I think you kind of get a little bit carried away around business, don't you? Like, we're selling great. But in reality, if you're not selling the right things, you're not going to have that business to go to. What I wanted to do, Karl, I've just got a couple of comments, a couple of questions, comments from a few different people. So Neil has asked, I think we're just kind of going back to the dividend question. So is it £2,000 per director tax-free dividend, and is that after corporation tax?
Yes and yes. So yes, it's 200,000 per shareholder. That's on your personal side. So when you receive that money personally, it's tax-free for £2,000, the first £2,000 on your personal tax return. And yes, it is after corporation tax. So simple example, Adam, company makes £10,000 profit before tax. Let's make the numbers easy. Let's say it owes £2,000 tax. So there's £8,000 left. That £2,000 comes out of that 8,000. If you were to try and pay a 10,000 dividend, you as the director would actually owe your company £2,000 because you've not factored in that tax liability. That tax liability, Adam, generally doesn't show up in your Zero or what other rubbish product you're using. I better not say the names, but anyway, I'll leave it there.
It's interesting, actually. So another question that Neil had was, what accounting software do you recommend? Just started using Xero.
Good shout, Neil. Good shout. Yes. Yeah. If you'd said QuickBooks, I would have gone silent. Or there's a green one that's been around for quite a while. But I better stop. I'll get myself into trouble.
It rhyme with rage.
It does. It does, Adam. It does. It does.
So zero is your recommendation there, absolutely, because I know obviously that's something that we like, and yeah, Neil has also liked your comment on that. Question from someone that you and I know very well, Karl, which is Peter Garrett, my business partner. He said, "What multiplier of monthly expenses would you recommend holding as a cash reserve to allow for growth?"
Okay, good question, Peter. Multiplier. I like the kind of 3 to 6 months. You know, if you look at your overheads, as Peter mentioned, overhead expenses. So we're talking overheads here. Those expenses that go out of the business on a monthly basis, regardless really the amount of sales that you're doing. Generally, your safe bet is between a 3 to 6 months. What that means is, if your overheads, monthly overheads, are say £10,000, it's a good idea to have £30,000 to £60,000 sat there as a nice buffer, should you ever need to call upon it. When things like COVID happen, for example, you know, a lot of businesses have been hurt by COVID. Some not so much, some have benefited, but those businesses where they've not been able to do any activity, the expenses still carry on. Although I'll try and stay away from this, the government seems to think that your only expenses is employment, and therefore everyone has furlough, you're all right, it's fine. There are a lot of other expenses that you need to keep ticking over. The subscriptions that we have, some marketing things you want to keep going. So it's always good to have that buffer, and I would advise 3 to 6 months. I think it's a good level.
Perfect. Chrissy, I'm definitely going to recommend that you get in touch with Karl afterwards. I think Chrissy's got some specific questions about dividends and kind of taxation.
Okay.
Chrissy, reach out to Karl afterwards, and I'll make sure we share his details to contact him as well. And I think we've got probably that's the end of the questions on this so far. So I think what we'll do, Karl, let's kind of go back to really kind of what we talk about, sort of the top tips, really. And I'm actually going to share this slide because I think it's probably worth us having it on the screen. I know you mentioned about sort of looking at those margins for each product, but do you want to kind of talk about the other two on there as well?
Yeah, so the margins, crucial. The volumes, it's like we were saying, Adam, it's the volumes, you've got to link them to your highest margin products, ideally. More volume on the higher margin products equals more money in the bank, essentially. So keep an eye on those, not just sales as a global figure. Chunk it down, look at those products, look at the margins on each product, and then look at the volumes that you're doing for each product. That will give you a real good indication as to, are you going to be profitable or not? Like we said before, if you're focusing all your efforts on that 8% margin product, then things might not go so well for you. And discounts are the biggest killer of profits. So they are, and that's a fact. Discounts can be used well, but to use discounts, you have to understand your numbers and those margins. I see people offering these huge discounts, and I'm just thinking, you cannot be making money on that. You can't be making, and generally they aren't, because they're not understanding the full picture. Or those that have, maybe not relevant for your industry here, but salesmen that go out and incentivized on sales. Well, if that salesman goes and offers a huge discount to win the sale, and then they get commission on that, that business is not making a penny. So be really, really careful with discounts. And something else with discounts is that people will think, I'll discount it now and I'll win it back later. Well, the chances are when somebody buys with you on price, they will leave you on price. Because if you're offering a huge discount, they're normally shopping over here. You give this big discount, they'll come over here. The minute you try and win your money back as such, then they're off to the next cheapest person. So be really, really careful with discounts. They can have a huge impact, and it's the number that doesn't show in that profit and loss account. You know, you've got your sales, you've got your purchase costs, you've got your advertising marketing costs. Discounts is not in there. It's offsetting those sales figures. And it's interesting, actually, with some of my clients, I'll ask them to actually show those discounts separately, because it is the silent killer. It's the cost that doesn't appear up. And then when you start to understand that, your whole mentality can change. You know, offering discounts to buy increased volume is generally a tactic that goes quite badly. Because
I mean, it's rife in e-commerce because look, we've I think the past few years it's always been this thing, trying to get someone to sign up to an email list, and automatically we give them 10-20% off. And it's actually surprising sometimes is that when we look at that offer for what a client is providing and the typical products that people buy, it tends to be the fact they're buying lower value, lower margin products and then getting another discount on the top of that. So a lot of the work we do at the moment is about incentivizing people to sign up without using a discount. And if you are going to use discounting, it's got to be, I think, the level of that discount will be less, but also you need to have some kind of tie-in of contract. So if you've got a subscription product, then you're going to tie something for maybe 3 to 6 months on average. Great, that makes more sense. I mean, like say, single product, discounting 10-20%. It's just, and I've actually put that in the comments. You said when someone buys with you based on price, they will leave you on price. So I've just kind of put that back into the comments. So I think that's a really good way to look at it. Cool. Okay. So let's look then at cash.
So cash, and on the previous slide, I put where did it go? Because that's the question that all of my clients ask me. I sit there and I'm producing the figures and it's like, wait, you made 100,000 profit. And then generally a swear word will come out of their mouth. And it's like, well, where is it then? Where is it? So the important thing is to say that cash and profit are not the same thing. And it's crucial for you as a business owner to understand the relationship there, because as I've said on this slide here, that the two numbers that every business owner does monitor, regardless of size, is the sales and the bank balance. Every business owner monitors that, myself included. Okay. But it's everything else in between that you need to have an understanding of, because generally what happens is the sales may go up. They may go up at a very nice level, but correct me if I'm wrong, but the bank balance very rarely goes up at the same level. Unless you're a one-man band consultant selling time for money with no costs, then chances are as your sales go up, the bank balance doesn't go at the same rate. And there's a number of reasons as to why that is. There's a number of expenses in there, but also the thing that most business owners won't be looking at is a balance sheet. And in a balance sheet, which shows the position of your business, there are a number of clues in there. So where's your money? And I think particularly for your audience here, Adam, stock will be a big kind of holder of cash. If they're buying the stock in to then resell that stock and they're holding on to the stock, then generally that'll be where the money is, because you're sending money out your bank account, you're getting something in return for it, but you don't always know when you're going to get the return on that stock. So I think stock management is a key area for the guys in your industry, understanding how the gross profit works, what stock they've got in there in terms of the product mix, and how long is it staying in there? Do they need that much stock? It's a balancing act. Don't get me wrong. It's not something that's simple. And there are some really good systems out there that can help you manage your stock and see what you've got in stock and look at lead times and all sorts of things there. Overstaffing is another common one. It's a case of, the sales grow, you get busy, your team gets busy, so you just chuck more people at the problem. Okay. And for most businesses, the second biggest expense is the people. Now, they can be the biggest asset or the biggest liability of any business. But I think before you get to that point, you really need to understand what we were talking about before, that gross profit. I told you one about this, Adam. But it's a case of, if you look at that gross profit and you're desperate for some more help, but if you really looked at the service offerings in that gross profit, it's made up of different elements. You might have something that's really strong over here, or something that's quite weak over here. And then when you look at the rest of your profit and loss account, there might be a number of expenses that are attached to that weak gross profit. So if you've got rid of those weak items, then you can eliminate all these expenses, which frees up so much more time to focus on the really good kind of income generating products. I think sometimes, again, it's that we want to grow, get the sales up. We're employing more people. Sometimes when I see people put on LinkedIn, we've hired this many people this year, I think, oh, you poor bastards, because it's hard. It's hard dealing with people. You'll know yourself, Adam. As I say, it can be your biggest asset or biggest liability, but it's crucial that you have an understanding of your numbers to give you the confidence of when you need to go and hire someone. Don't just chuck people at the problem.
Definitely. I was going to share a little example here as well, Karl, because one of the things that we've done recently is, like, as you know very well, our second biggest cost as a company after people is software. And again, if you're a Shopify merchant and you're adding this app for $10 a month, and then you're buying this service for $20 a month, it's actually pretty scary at how quickly those things ramp up. And one of the things that we've just done is that we've gone through all our software to an audit to make sure that we're still using it. So again, if you're a Shopify merchant, checking those apps and seeing if you're actually still using those. And it's actually surprising the amount of stuff that you don't use. Yeah. And the second thing is that, look, all these kind of software as service companies, they all offer discounts for buying, 6 months at a time, a year at a time. And we've just done this exercise, and pretty much every single software that we've used, by going to an annual model, we've saved between 10 and 30%.
Yeah.
So it's like, straight away, if I think about our gross margin, that's had a massive impact. And it's literally just about being sensible of saying, look, can we actually pay this on a yearly basis? Can we get a better deal? Can we just ask and try and get a better deal? Ultimately, we've done that too. We've said, look, we're going to leave you company XYZ for this company. Okay, no problem. Here's 15% off.
Yeah.
Excellent. So it definitely can be done. I definitely recommend to people listening, go and do that as one of your first actions that you do off the back of this.
That's a great example, Adam. But I think that the thing behind that, which links back to potentially Peter's comment before, is you need the cash reserves to have the confidence to do that. Because a lot of businesses live kind of hand to mouth type thing. As it comes in, it goes out just as fast. So when that shiny new product does come available, they have no choice potentially to go for the monthly option because they don't have those cash reserves. So cash gives you confidence. It gives you confidence to go and look for those deals and take advantage. Yes, you're having to give up your money, in the first instance, but as a result, your business will be stronger for it. So yeah, I think that's a great point, that, Adam.
Cool. So in terms of easing that problem, then, I know you've got some points here, and we talking at the start there about obviously the profit first system, which I know is here too. So yeah, do you want to just go through some of these points, Karl?
Yeah, sure. I mean, essentially, it's just having a regular view of your financials, being able to access that information easily. That's why I said Neil's made a good decision using Xero. Xero integrates with Shopify, PayPal, and lots of other products. So the bookkeeping side of things, getting that data into a system, is not as cumbersome as it once was. So it's about being intelligent and looking at your app stack, it's sometimes referred to, and saying, how can we get the information into our accounting system as quickly and as easily as possible, so that we can sit down on a quarterly, monthly, weekly basis and actually have a good look at our financials, not just our sales and our bank balance, but all the expenses that go along with that as well. And when you do this regularly, like you've just said there, Adam, you will spot things and you think, oh, we're still paying for that. Cancel that. Whereas before, you wouldn't have noticed that until after 12 months has gone by, maybe. So it's crucial to sit down on a regular basis and review those financials. Now, obviously, I'm not trying to plug me here, but you may need a financial kind of minded person to help you interpret those numbers. So like we're doing, Adam, sitting down, reviewing your numbers regularly, so that when there are some numbers that are not so obvious, you've got somebody there to explain what they actually mean to you. So you can, my job as your accountant is to convert those numbers into a language that you can understand so that you can make the best decisions for the business. And that kind of, when we're talking about the balance sheet, most business owners don't know what a balance sheet is because they've never been taught what a balance sheet is. Essentially shows the position of the business at any point in time. And on there it says there's lots of clues for cash management, and there is with this stock. If there's people owing you money or if you owe them money, it's all in that balance sheet. And then we've got KPIs as well. So with every business, there will be key things that you should be monitoring to kind of understand the health and the performance of your business. So it might be the number of sales of our top selling or top gross margin product, if you see what I mean. You could have various key performance indicators, but they should link to your overall target. They won't be the same for every business. They'll be different for every business. But the idea is it gives you that quick and simple view of, if these numbers go up, we know we're on the right track. And when we see these numbers going down or we're not hitting our targets, there's an action point behind it. We know we need to do something to correct it. So it's about taking that big profit and loss and balance sheet and chunking it down into something that's easy to understand and easy to then go. We use like a traffic light system. So we'll look at a number of set targets. We want to hit these numbers. If we see any reds, let's go and have a look at that in a bit more detail. Why have we got reds in this area? And then we've got profit first system, which was alluded to before. This is, I can't take credit for this. This is a very intelligent chap, much cleverer than I am, called Mike Michalowicz. I think that's how you say it, Adam. Right. Who wrote the book Profit First, which I read and I've listened to a couple of times since. Probably read it first time 3-4 years ago. And he basically says all accountants are a load of rubbish, and that the way that we produce accounts doesn't make sense. And at first he got my back up, but then I completely understood where he was coming from, because as I often do, I put myself in my client's shoes. How do they look at their business? How do they want to run their business? And as I said before, they understand that bank account. So he flips the accounting equation first off. He kind of says, rather than sales less costs equals profit, he has profit less costs forget which way around it goes, Adam, but he has a different equation for the accounting rather than your typical model. And then he says, use different bank accounts to account for your money. So you want a separate bank account, which we would always advise as well, for your taxes, for your VAT and your corporate taxes. It's not your money, so get rid of it. Put it in a different bank account. He would have a separate account for profit, for example. So again, we're going back to something really simple to look at on a regular basis to see if you're on the right track. You know, if you're making regular deposits into your profit account and still able to meet all your current liabilities and all your taxes and all those kind of things, then you know you're doing something right. You don't have to be that financial expert to read through all your financials. You get a feel that you're on the right track by making those regular deposits into that profit account. And he goes into quite an in-depth system where you'd have percentages for each allocation of money. So he might have an allocation for costs and wages and things like that, for taxes, and then profit. Again, that would be a percentage. But there are different ways that you can look at this system. But it's a real good read. I'd advise anyone to go and have a read of it and use it and use it in your own way. You don't have to take it word for word for the book, but you'll start to see opportunities in your business to start to use your bank accounts to quickly see where your money is going ultimately. And are you actually profitable? It's a real good system. And as soon as this is finished, I'm going to Google his profit equation.
You know, I think ultimately, Karl, it's kind of going back to that first example you shared, isn't it? That ultimately the people that are here are running businesses because they wanted to get something at the end of it.
Yeah.
And I think it's about reframing your mind that accounting that you're doing and the management of your finances you're doing is all about for the business, and it's taking it back to you as an individual, isn't it? And I think that's the bit of the mindset shift that I've had, is that we need to actually start to think, first of all, what is it that we want? And then what does the business need to do to be able to give us what we want? And I think I've never really thought about finance in that way before. It's always been something like the books tell us this, or the spreadsheet tells us this, and that's what we're going to get, and that's it. And it's kind of taking control of it again, isn't it?
Yeah, hugely, Adam. Because as you say, that's why 99% of us get into business in the first place, because we want to achieve more in our life, whether it's more holidays, bigger homes, whatever it is, or just security, stability. It all starts with you personally. And I always, a question I often ask business owners is, why did you start this business in the first place? Because I see a lot of very stressed out people. And it's very easy to lose sight of why you started in the first place. So, take some time out of your business. It can be all consuming, can your business. Take some time out, schedule it, put it in the diary, and revisit why you started the business in the first place. Revisit those personal goals, and you will see your business in a new light straight away. I can guarantee it. Something that I do on a monthly basis, and because it's quite easy for your business, it runs fast. It's quite easy for it to get away with you and just consume you, and you get buried. You've got to take yourself out of it, like I know you do, Adam. You and Peter. Friday's off now, isn't it? Every Friday.
Yeah, that's right.
That's fantastic. But you get to clear your mind at least once a week. There, you get to clear your mind, and when you can do that, you can view your business completely differently. You look at it with a different pair of eyes. You really do. And then you see these opportunities and you see the mistakes, and that gives you the chance to go and put them right.
Excellent. Well, guys, I think what we're going to do is we're going to open the floor up to questions in a moment. So if you do have questions specifically about margins, about managing your finances, if there are any questions from UK merchants around taxation, Karl's time is limited, and so we've only probably got about another 5 or 10 minutes maximum. So if you do have any questions or anything that we've picked up on the slide so far, just pop those into the comments on whichever platform you're tuning in from. But before we do that, Karl, I wanted to talk to you probably a little bit about your summary, and then talk about your book as well.
Yeah, cool. So yeah, the summary, I think we just touched on a little bit of it. Understand where you are and where you're going, and put some numbers behind that. Then you need to understand your gross profit, because that is the driver of most businesses. Understand where your money is and how to get it back, because you can't put a plan in place to get it back until you can see where it's been leaked. It's like a leaky bucket, isn't it? If you've got a bucket full of holes, you can pour all the water in that you want, but it's just going to leak out faster. So understanding where the leaks are is a key focus. Fix those leaks first, then you can start pouring the water back in, and the business will grow at the right level, rather than leaking the money everywhere. And regularly review your financials. Don't make it a once-a-year activity. Have it as a regular meeting, whether it's with yourself or with your business partner or a coach or your accountant. Just have those regular meetings and regularly review your figures, because your figures tell the story of your business. They do. They tell the story of your business. So, and when you learn to understand that story, you can then make the right decisions to put it on the path that you set in section number 1.
Excellent. And just talking about paths, I suppose I wanted to ask you about your book, The Profit Company. So tell us a bit about this, Karl, and kind of tell us, sort of where this came from and why you decided to do it.
It came from a blog. I thought, I need to write a few more blogs, and I got carried away, Adam. That's genuine. I started to write it. It was a blog, and then it became a bit of a little ebook. And then I thought, no, there's more behind this. So I cleared the diary for a week and wrote The Profit Compass. It's not a heavy read, a couple of hours, you'll get it done. But really the driver behind it was to educate people about their finances so they can make better decisions. I'm generally the last to know. Okay. And what I mean by that is people have worked really hard to build their businesses, and they'll go and find themselves a cheapish accountant that does the basics, does the compliance elements. They'll invest in the marketing. And then generally the final piece of the puzzle is the financial system. That's the bit that never gets any attention to it. So I really just kind of wanted to make people aware of how to look at their numbers early on, if you like. And yeah, it's just about, and the book also, it's a practical book, because it's about people that I've worked with. It's real businesses. It's not theory. It's people that I see on a day-to-day basis, the good, the bad, and the ugly. And And yeah, it just kind of, there's some case studies in there to highlight what different people have done to achieve success. And yeah, it was. It seems a while ago now since I wrote it, Adam. I'm actually going to do, hopefully, a revised version later on this year, because I think I've learned a lot more since writing the book. So there's a lot more to go in there.
Perfect. Cool. So yeah, we've just had some really good comments, Karl. So I'll just share a few. Cool. So Chrissy said, "Will you be my accountant?" So I think probably worth having a conversation with Chrissy afterwards. And I think
it's only around the corner for me as well, Leyland. There we go.
So that's good. And yeah, thanks to Darlene as well, saying great info. So yeah, really appreciate it. And what I was going to say, guys, is that if anybody wants a copy of today's slides, just feel free to email me, adam@blendcommerce.com. Equally as well, what we are going to do, we're actually going to put a recording of this available on a blog on our site and also on our social media. So if you are watching this on replay and you want to get in touch with Karl, you can see his email address there on the screen too. And yeah, I think we've kind of answered all the questions. And Karl, I really appreciate you coming on, because I know we've wanted to do this for a long time. And you know, it's really nice to be able to kind of have an open and honest and frank chat about money, because I don't think, you know, a lot of us as entrepreneurs, like you said, you're always the last to know, and I think that is very much the case when it comes to basically, you know, looking at finance. And Christy's very kindly just dropped the link into the link to your book. So yeah, cool. I think that probably brings us to the close. So thanks ever so much, Karl. Really appreciate it.
Pleasure. Thanks, Adam.
No worries. And thanks, guys, everyone, for tuning in. And yeah, just another few posts of appreciation from here, Neil, too. So, guys, we are going to be doing a series of these Facebook, LinkedIn, and YouTube lives. If there are any other particular topics that you'd be interested in us covering, we're going to be looking at HR. We're going to be looking at hiring. We're going to be looking at getting the best out of your people. We're really going to be looking at kind of breaking down, like Karl has here, of, I guess, the back end of a business and how you manage that more carefully. So if you would like to make any suggestions of any topics or any things you'd like us to discuss on these sessions, do let us know. And yeah, we'll be back in touch soon. Cheers, guys. Thanks, Karl.
Cheers. Thank you. Bye.